So last week, the bears awoke as we moved from pullback buys to a change in sentiment. As all eyes are on Jackson Hole this week, the Fed looks to new inflation numbers and, of course, future intentions on interest rates. Meanwhile, our eyes, once again, will focus on the end of earnings season. But this week, it's all about the bears. Welcome back, everybody. Tom Gentile here, America's Pattern Trader. And last week, I showed you this chart of the S&P 500 ETF SPY. In fact, it's the exact same chart I talked about. I wanted to bring this up. Now I'm going to take it down, and I want to compare it to what has happened in the span of a week. So take a look at the new chart. Let's add 5 days on. Last week, SPY dropped 3%. But what's more important is how much volatility rose last week, about 15%. That's the blue line you're looking at, and that is a move in percentages. So what is spooking everyone right now? Well, it's a combination of things. First, yields are climbing again. When you take a look at something like TLT and bond funds, they are usually accurate in forecasting future interest rate changes, but they're getting a change of heart. In fact, we went from expecting 2 rate cuts in the year's end. Now we might be getting hikes. And even more recently, the Fed has decided, well, we're just going to see it on a decision by decision. Take a look at the chart here for TLT, and you can see the volatility is definitely on the rise, but the candlestick chart has been dropping since the end of July. That big red square in the bottom right-hand corner, that's where we broke support at 95. As TLT goes lower, the yields are going higher. And again, folks, that's what happens. We lead a bond into bond drops. As bond drops in the that ETF go lower, that means that interest rates are likely to be forecasted higher. Now, this is not just affecting the stock market or the bond market either. Take a look at the price of gold. This is GLD. This is the Street Tracks Gold ETF. Interest rates hit most commodities just like the stock market. GLD, well, it dropped about 2% last week, and it's more than 10% off its year-to-date highs. If you want to see something that dropped off really hard, take a look at this chart. This is Bitcoin. It's down nearly 10% since last week. Most of that was related to a sale of Bitcoin by SpaceX. But instead of bouncing higher like it has done on the past off of a negative drop, it seems to be trading at the low end of last week's prices right now. So let's chalk that one up to Jackson Hole as well. So I said last week, while everybody's focusing on news and opinions, let's be pattern traders. And I also said last week, though there's no guarantee that patterns in the past are 100% going forward, I want to show you my top 3, my only 3 bearish patterns going into the end of August. Let's take a look at each. Number 1, Macy's, symbol M. Now, what you're looking at here is a chart, and it has the price of Macy's on it. It also has the blue line, that's volatility. And you're also going to see some green squares that with the letter E in them. That is earnings day. Prior to those, I have some arrows that show the price direction. That's about a week prior to earnings. So Macy's has been moving down the chart for months now, but the week prior to earnings, it's 4 for 4 with an average drop in price of about 7.7%. And again, that's the week prior to the earnings report. What also looks good is the fact that the implied volatility, that's the blue line, has gone up prior to every earnings. That's good for put buyers. Let's take a look at chart number 2. And we're looking at Toll Brothers, symbol TOL. Now, this chart, you know, I have on the chart, it says that Toll Brothers went 4 for 4 to the downside 1 week prior to the last 4 earnings. But some of you are looking at this chart and you're saying, well, wait a minute. First of all, this is a home builder. And second of all, Tom, you might be wrong here because the trend looks like it's going higher. Folks, let's not confuse a long-term trend with what happens a week prior to earnings. All right, I'm not looking at monthly trends here. I'm focusing on that 1 week before earnings, which in this case has been down an average of 6% in the last 4 quarters. Chart number 3. This is Patterson Company's PDCO. Now, PDCO, something's missing here. All right, I'll tell you what's missing here in just a moment, but you can definitely see the price chart. You can definitely see that 3 out of the last 4 earnings, the price dropped a week prior to earnings. Now, the most recent earnings, the price went up before earnings, and it gapped up right when the earnings report was mentioned. Volatility is not on the chart because it's all over the place. In fact, I removed it from the chart because it was so uncertain. And it also has a lot to do with lack of liquidity in the option prices. Best way to play a stock like this is just to short it a week prior to earnings. Now, last year, you'd have gone 3 for 4 with this pattern and about a 5.5% move on average to the downside on the stock. Which one's best? Well, that's a loaded question, but if we looked at each of them on a table, that might help. Here's the table I'm talking about. This table ranks these, and what it's ranking them by is best close median percent change. It basically means which one moved the most prior to its earnings. Well, Macy's at the top. You got Toll Brothers at number 2 and Patterson at number 3. Now, when you're looking at some of the columns here, I've got a column that is highlighted in yellow. It says best close median percent change. Macy's, 7.73 prior to earnings. Toll Brothers, 5.95 prior to earnings. Patterson, 5.57 prior to earnings. And just next to that is going to show you each quarter the percent change in stock price. If there's a minus beside that number, that meant it went down. If there's a plus beside that number, that meant it went up. As you can see, Macy's was down every quarter. All right, so was Toll Brothers. Patterson was 3, 4, 4. What I showed you were patterns only. You can use options. And if you can use options and you know how to use them, buying premium makes the most sense here, buying about a week before earnings, but making sure you step aside and close the position out right before that earnings report. All right. Hey, thanks for watching this video. Comments below on how you use stocks like this and patterns like this into earnings. Next week, I'm going to come back and I'm going to talk about September. You know, we're turning into a seasonality change in September. So I'm going to be looking at the season of September. I'll see you then. Bye now.